Here we go again. What a day. What a move. Hope you guys had a fantastic Thursday. It's time to get back to work. It's Thursday evening. We're getting ready for Friday's trading session. We get some big news on the radar for tomorrow. Some big moves on the chart today. I got a lot of great trades setting up for finally Friday's trading session. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Friday. As always, before we jump in and get this party going tonight, make sure you subscribe to our channel so you don't miss our next video upload. And if you enjoy the video tonight, you know what to do. Hit that like button for me. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro. Friday is not going to trade itself. Where's the easy money on Friday? Where are we going to make our money to finish up the week and go into the weekend here? Great day today. What a move. What a move. Well, as you can see right now, pretty much everything is bearish on the E-minis. Nasdaq, of course, is bearish. E-mini S&P is bearish. Oil, which you can't see all the way over there, oil is bearish, but you got to be careful trusting the bearish momentum that we're seeing right now on the oil. You know, really at this point, we've got a big move down on the E-minis. We're looking to sell pullbacks. Very simply put, right? Looking to sell pullbacks. I have a number of pullback areas I'm watching, and depending on how far this thing pulls back, that will tell us kind of where the perfect entry will be based on our price action setups. The market may keep going lower too. We have a lot of open space below us here right now on the E-minis, so we'll talk about what to do if this thing keeps on going lower, because we definitely want to stay out of trouble chasing this thing going lower here. So I'll put together a game plan for you guys if we keep grinding down here ahead of that big news report tomorrow. And speaking of grinding down too, you know, I'd love to short some pops here on the crude oil, but you know we got that last week's close down there. We may end up grinding down as well. I got some really easy shorts on the oil market as well. I've also got some long trades setting up for tomorrow, but it's going to be, you'll see tonight. You'll see tonight. We have to be very careful with how we buy, especially, well, really across all three of these markets, and you'll see why as we go deeper into this video here tonight. So again, I'm going to cover all my favorite trades in this video. We'll go over each of these charts here in a second. Before we jump into each individual market and talk about the setups for tomorrow, let's just make sure we're on the same page tomorrow. There are two really big things you want to be aware of. One, of course, is that CPI report at 8:30 Eastern time. This really is the only major news we've had all week. It's been a pretty quiet news week here this week. You could say that this is arguably the biggest news of the month. We do have the FOMC announcement next week, so that will probably be the bigger event of the month of June. But this is a close second place here. In fact, this CPI report is rumors started to circulate the news wires this afternoon about people kind of being nervous about a really high, kind of a shockingly high CPI report in some aspects of the report tomorrow, which kind of led to that rolling over of these markets here today. So markets were definitely nervous about that number for tomorrow. Keep in mind too, 8:30 Eastern time. Last month we saw the CPI report and the market really whipped. And so just be very careful trading around that news tomorrow. If I had to guess, I would guess the best trades tomorrow are going to be later in the morning, probably 9:45, 10:15, 10:45, after kind of the dust settles after that CPI report. So be aware of that. And then don't forget, tomorrow we probably are going to have rollover finally tomorrow, right, on the E-minis, the S&P, the Nasdaq, the Russell, the Dow. We're currently on the 0622 contract. We'll make the move tomorrow to the 922 contract. I will be analyzing the 622 contract tonight, so be aware the charts will be 622. But you could almost guarantee it's looking pretty likely tomorrow is the day we make the move over to the 922 contract. If you do not know how to do the rollover, if you don't know what you're doing on that, I have a great beginner course on our website. Talks all about contract rollover, all about that good stuff, and of course a whole lot more as well. Let's get back to our charts though. So be aware of that news number tomorrow, 8:30 Eastern time, CPI report. And, you know, remember, tomorrow's a Friday, right? So, you know, early in, early out, try to make your money early, get out of there and try to spend all that money in one place this weekend. All right, we're going to cover all the best trades for tomorrow. I'm going to cover each one of these charts, whether you trade one of these markets or you trade all of these markets. I'm going to give you learning opportunities, earning opportunities throughout the entire video here tonight. I'll keep adding to setups, providing different advanced ideas as we go deeper in this video. I try to save the best stuff all the way to the end to give you a reason to stick around here tonight. So if you're serious about your trading, there'll be new ways to look at the markets throughout the entire lesson tonight. So I'll give you a reason to stick around and watch this thing the whole way through. Let's jump first though into the Nasdaq. The Emini Nasdaq, the NQ, also could be the QQQ or the whatever reverse of the QQQs are these days. What do we got going on right now on the Nasdaq? What's the most important factor on this chart? I think the most important factor on this, there really are three things. And again, you'll notice this is the 622 contract here right now. Really, the most important factor is the strength of that move down. Anytime we see a real strong move in one direction, we expect to see a pullback and a retest of that low. Once we get the retest of that low, then we look for reversals, double bottom reversals, or we look for breakouts going lower. And so we're really at this point, based on that strong move down, we've got opportunities to sell into the bounces, opportunities to buy off that reversal, and definitely opportunities here to trade the breakdown, most likely later on in the session tomorrow. Those can be some of the best trades that you get after it breaks down going lower. We'll talk about the entry setups here in a moment. The second piece of this is the size of this move. It's a pretty big move without really any pullbacks along the way. Again, markets kind of got spooked this afternoon as rumors started to circulate about a shockingly high CPI report tomorrow. Those nerves kind of brought everything down. And so the size of that move, anytime we see a really big move in one session, we always know that when people come back into the market tomorrow, they're going to look at this and say, you know, we're bearish, but this is a little bit too low to sell right now. And what they'll do is they'll start looking left. They'll go, okay, can I find some levels of resistance, right? Can I get up here? Because I like the idea of selling up here, but I don't like the idea of selling down here. So we know we're bearish. We know that we're looking for that bounce and that move back down. Just don't be surprised if the size of that move is pretty big, right? Don't be surprised if we get a really deep pullback here to attract more sellers into this market. What I'll tell all of our students again tomorrow, and in these types of situations, I always think as soon as the pullback starts to feel like it's reversed, that's usually when it's time to start looking to sell. So right when if you're watching this stuff tomorrow morning or overnight, right when you go, oh, geez, maybe this is a reversal. Bingo. That's exactly when we've gone far enough, and that is usually where that's usually where it's time to start looking for that short, right, back down to retest that low here. And again, the 922 contract is definitely a big factor on this for tomorrow. We'll be trading off that most likely tomorrow morning. So how do we trade this stuff right now? What I want you to think about is and keep in mind everything I talk about tonight can also be applied to the S&P. The S&P is almost identical here to the Nasdaq, right? Almost identical. So I'll try not to repeat myself too badly on this video here tonight, but they are very similar. So everything I talk about right now in the Nasdaq can also be applied to the S&P. There are three types of pullbacks that you need to learn. Three types of pullbacks you got to learn. One is a shallow pullback, one is a modest pullback, and one is a really deep pullback. Now, in the idea of getting a big paycheck out of this, right, the best is those deep pullbacks, right? But those have a bit of a trick to them, and you'll see that here in a second. So the shallow pullback, for example, I love this channel. I love that channel right there. I love that trend line coming down. There's a lot of levels, right? This whole area right here, that low, basically the low of that big range we've been seeing this week here. These are all fantastic areas to sell into, but I'll tell you, it's really bearish. It's a very, very strong move down here, so we may not get that far up the ladder here. What if we get a shallow pullback? What if we don't get up into some of these juicier areas up overhead? What do you look for in that situation? What I do is I look for a trap entry. Shallow pullbacks, the concern is I don't want to sell too low, right? That's the challenge, right? We have to assume that all the big money traders are waiting up top here, and so we don't want to sell too low. And so on a shallow pullback, what I'll do is I'll look for what I call a trap setup, right? We'll wait for it to pop up, let the buyers commit here, and then use one of those swing highs. Because again, the challenge in a shallow pullback is you're trying not to sell very low, right? And a trap gives you the ability without just simply trying to pick that top, right? So shallow pullbacks, traps are where the money is. Now, we'd much rather get somewhere up around some of these prior swings. We talk about this quite a bit on this newsletter, right? Anytime we see a big, strong move, I like to mark those swings, right, and look for a short off those highs. Really like that area up there, 12,410, right, give or take. If we can get up around this area, what I really want to do is now try to rope in some of those buyers here and use their exits as fuel to go back down and retest low. Remember, once this thing starts to feel like it's reversed, that's when you know it's gone far enough. And so hopefully we'll get a bunch of traders who are not paying attention. They're definitely not watching this video here tonight. They'll come in, try to buy that pullback thinking, well, it's gone to a monthly pivot or it's gone too far. When I was a new trader, I would think of whatever lame excuse I could think of to buy, a bear market. Once those buyers come in and try to buy that pullback, think about where their stops are, and you can target their stops, right? Literally use their stop loss, because if you're a buyer and you get stopped out, you're selling out of that position. So it's a failure setup, and then don't forget, on the way back down, grab that pullback combination. So it's a failure off the moving average, and then into that first pullback combo. Where's my target? Back down to retest the low, right? Because again, anytime we see a strong move, we're waiting for that retest of that low. Okay, now here's the next one. What if we really pop up, right? I mean, again, for reward's sake, for the profit on this trade's sake, this will be the best possible scenario. Might not happen, but boy, would we really love to get something like this. Really strong move up. Now we get a really strong move. Now what happens is momentum starts to work in the favor of the buyers. And so now I want to be a seller, but now you have to kind of give the buyers the benefit of the doubt. This is where the two-try failure comes into play. The buyers come in, they try once. They come in again, they try twice. What I want here is lower lows on those two tries. The reason for that is because the way that I teach it is buyers want to buy low. So you've got the aggressive buyers buying shallow. You get the more experienced buyers coming in. They're buying fibs. They're buying a little bit deeper pullback there. Once you've got all the buyers roped in, and you now know where their exits are, you now know where all their pain is now you can find those entries with that two-try failure. Now remember, this is where the fun begins, because now as the market starts to drop here now oftentimes these go to free fall. We don't always get that pullback, right? That initial pullback. We'd like to get that pullback set up immediately after that failure, the failure into pullback combination. The problem though is that because the market went so high and trapped in so many buyers, it oftentimes goes into free fall and you don't get that pullback. The next best thing is that trap setup before we go back and retest the low. Does that make sense? Right? So again, it's a two-try failure. And then as it rolls over, it's that little trap before we go back down to retest the low. Now, we've seen a lot of these two-try failures this week, haven't we, right? And boy, I got a ton of emails from you guys, a bunch of comments in the comment section, people who are using these setups, making money on their own. And I know most of you guys have taken the free trading course. You've learned all the setups, the traps, the failures, the pullback combinations. You know when to take them. You know when to skip them. But listen, if you're here for the first time today, right? If you haven't taken the free class and learned all the setups, right, and trading the stuff on your own, I would definitely recommend grab a copy of it. I'll put a little link up here for you in the upper right-hand corner. That roadmap that I teach in our free trading course, if you're trying to transition into full-time trading, I'll tell you right now, that roadmap will give you an easy formula to follow, and it will also get you ready for trading with us every day in our trade room. If you hate missing the best trades each day, or you're taking too many losses, grab that link, take the free trading course, learn the strategy. That way, the next time I say deep pullback, 1, 2, hit those stops, and then as we collapse, find that trap, right, and grab that trap. You'll know exactly what time frames, what indicators, and I get a lot of examples of those setups as part of that free course as well. That's a great way to look at this right now here for the short side. Now, we definitely have potential for a reversal tomorrow. It is unlikely the market pulls back and reverses with a V bottom like that, but be aware, with news tomorrow, reversals are always possible. So we'll talk about some reversals here on the S&P. Now, what if the market goes lower? What if we keep going lower? How do we buy it, right? Can we buy? Remember, I can buy it off of that low. How do we do that? Let's talk about that on the S&P, all right? So the NASDAQ and the S&P are pretty interchangeable. We get a pretty good idea for those 3 types of pullbacks. And again, you know which pullback I want, right? I want the one that works. No, I'm kidding with you. I want that deep pullback tomorrow. That would really be the best one that we could look for. Over on the E-mini S&P, and again, you can see these are very much almost identical here on these 2 E-minis. Right now, you can see there's a very strong move down on the S&P. A strong move down tells us to expect a pullback, a retest of that low. Once they retest that low, what do we always say? Mission accomplished. Once they get their mission accomplished, then we can look for that reversal going back higher, or we can look for that blast going down from there. We're going to cover that here on this chart in a moment. The size of that move is pretty substantial, which reminds us, don't be surprised if it gives us a really deep pullback. How deep? How deep pullback, do you ask? Usually it's just about when you start thinking, oh my goodness, maybe this is a reversal. Bingo. That's when you know right about now, right? That's about how deep it needs to be. And again, this is the 622 contract here on the S&P. And so just be aware of that. Again, we'll be trading off the 922 contract, assuming the volume rolls over. If you look at kind of the S&P here right now, just for example's sake here right now, you can see that as of, 6:15 in the evening right now, the 0622 contract has more volume on it. The 922 contract, once that daily volume is higher, then we'll make the move over. Between you, me, and YouTube, if we're really close tomorrow, I'll just make the jump. Okay, so if we're within 1,000 or if we're within 2,000 contracts tomorrow, you get back to your desk tomorrow morning, I would just pull the plug and go to that 922 contract, because the rollover will happen midday. Make sense? So hopefully it's nice and easy, nice and clear. Same thing the NASDAQ right now. The NASDAQ has more volume on the 622 contract. But if we're close like that, if we're within a couple thousand contracts tomorrow morning, yeah, that's your sign that it's time to go to that 922 contract. And again, I'll make sure everybody knows to do that tomorrow in the trade room. Okay, what we look for this? First of all, we talked about the shallow pullback, right, trap, the modest pullback, right, the failure in the pullback combo, the deep pullback, right, the 1, the 2, and the right and the short back down again. We covered those, right? Now those are money making setups. Now, how do we buy it as we bounce off of that, right, off of that area, right? So now let's say we go up. We get that deep pullback, buyers once, buyers twice, we collapse back down, we grab that trap if we get it, and go back to that low, right? So that's the scenario now. Now we're back down to retest that low. The bears get their short coming off of that low here, right? Bears get that short. We're back down to retest that low. Now, mission accomplished, right? Now what do? Now that we've got the bears taking their profit now we wait now, and we wait for the weak hands now to come in and try to sell into this low. Okay, remember, the smart money in the market, they want to sell nice and high, right? They want to sell nice and high. Once we go back and retest the low, anybody selling down here into those lows, those are the weak hands, right? Small accounts, small positions, obviously inexperienced selling into a major low like that. This is where we should be taking profit, not getting short. Once we see those, we assume inexperienced sellers trying once, trying twice. Why twice? Because we're so bearish. Remember, I'm at a turning point. Okay, if I want to take a reversal, I have to A, be at a turning point. I have to B, see signs of exhaustion, and then C, try to use their stop losses as fuel. Now, at this point, the only real variable is this trend line coming down overhead. So this is going to be the one variable here for tomorrow, depending on how much space we have to get up to that trend line. We may get a situation where we are able to use that trend line on the other side of it. But again, without kind of seeing how this thing plays out here right now, the key aspect of this, though, is we want to see those bears retest that low. Then let those sellers start wrapping that rope right around their neck. We need some sort of catalyst now to get that jump coming off of that low. And the catalyst we're going to use are those stop losses. Right? Are those stop losses. Now, again, be aware of that trend line coming down. But in a nutshell, what you're looking for in this is you're looking for that failure to go. And then you want to try to get into it on the turn before we get back up and retest that high. Okay? That high is where you can expect to have more bears coming in. Okay? So what we want to do is find that 1-2 try failure. Get that nice strong signal. I like to draw a trend line off that low or look for a trap below that low. That's always my favorite, just so you guys know. You'll see examples of that in that free trading course. But you want to try to buy as low as you can, right? So trap in those bears, use that trap below that low, draw that trend line. Again, try to buy off support. We're trying to get that failure to trigger and then run higher. And then what I want is as we're going higher here, I can now grab a new trend line here. Again, pretend this trend line doesn't exist right now. Just kind of the basics of this. Find that new trend line, mark that new channel, and we're buying that first pullback. And again, that first pullback, I need to get it before we go back up and retest that high. Okay, this is why having a really big, deep pullback would really be nice here, because once they take out that low, moving average comes down, of course, the bears come in once, twice, stops get lit up like a Christmas tree, and we can start buying into those stops, using those stops as fuel, and then again, finding that new channel, marking off that high, marking off that low, drilling down now, and really grabbing whichever entry pattern we can find off of that low. I love traps, that first test trap that we always talk about. I love traps off that. Trap entry, failure entries work great. Pullback combos. One easy target is back up again to that high. And then you have to assume at that point now that more bears are going to come in and they're going to want to sell it. So at that point now, moving average comes over. At this point, now we look for that same thing. 1, 2 from the buyers at this point. Remember, overall bearish now still. And we can look to short right back down again. Do you see how this kind of develops into a range? The sooner you understand this range development, the better off you're going to be as a trader. Strong move down says sell that deep pullback. Take your profit to the lows. Trap in those weak hands. Trap in those inexperienced traders who don't know where they are on the chart. Use their stops as fuel to go back up to retest those highs. Once we retest those highs, expect more bears coming in. Don't just guess. Wait for those buyers to come in. Use their stops as fuel and then run back down again. This is a type of range development, that kind of dance that we do every day in our trade room. That's the way you want to buy it off that low and sell it off of that, right off of that high. Now, the next question is what if we go lower right now, or what if we pull up and then blast lower? Okay, so those two scenarios will pretty much be covered by the following here tonight. All right, so whether we keep going lower all right, or whether we go up and then kind of blast, right, and go lower there. Let's talk about this now. So first things first, if we keep going lower, we have not given sellers any chance to get into this thing, have we? So we're still waiting for, really, if we keep going lower, nothing really changes. In fact, what really becomes important is now everybody wants that deep pullback. You know what I'm saying? So if we keep going lower here, let's say, for example, the market keeps on kind of bleeding lower, right? Bleeding lower. There's nothing that's changed at this point. Now, what I will do is I'll grab some of these lines, I'll put some more lines on here, and we'll still look for that shallow pullback trap, modest pullback failure, hopefully, again, deep pullback 1, 2, and then back down again. So it's ultimately that same pullback sequence, that same 3 types of pullback sequence that I talked about in the beginning of this evening. It's that same idea if we keep going lower. Also keep in mind too that, as we go lower, we may end up settling into a range down here. Anytime we have major news coming out, sometimes it'll settle into a range. If we do settle into a range, the same thing applies. It's the shallow pullback trap. It's the modest pullback failure. It's the deep pullback to try, right, into trap on the way back down. Okay, so that the range doesn't change anything. We're still looking for that deep pullback up around key areas of resistance to sell back down again. I'll be honest though, if we see a range down there, a range is almost better because ranges act like magnets. So the key is if we keep going lower, just be aware if this thing kind of dribbles lower here, we're still waiting for that pop up, right, and that short off the high of that channel. What we want to be kind of aware of is let's say we get a relatively modest pullback here, and then we start really running, right? Market kind of, we get a little trap entry, shallow pullback, little trap entry, and it starts to run and really make that move going lower here. If it starts to really run, now just draw a new channel, connect off that low, connect off that high, go looking for your prior swings, right? Get up underneath them, and we're basically looking, again, same basic idea. Shallow pullback trap, failure pattern off that high, deep pullback, 1, 2, stops get run, find that trap, right? And back down again, right? Makes sense? So a lot of this will be, if we do end up going lower here, what will it look like? Okay, will it just kind of dribble lower? Will we kind of, dribble lower like this? If it dribbles lower like that, just keep that trend line locked on those lows, up around those highs, and you got it pegged. Then it's just a matter of which entry setup do you get. Do we trigger there? Do we trigger up here? You know what I mean? It's just a matter of time before we get that pullback and we can see which entry setup we're looking for off of that low. The one that is going to be a little more difficult for us will be if it pulls back halfway and then blasts, right, and runs lower. It's a pretty simple idea. Just simply mark up that trend line there. Go up off this high here, leave these, right? Definitely leave these bigger levels up here because, again, you never know with major news on a Friday. We might end up seeing major news come out. It may send the market lower by 9:45, 10:15. The market kind of short squeezes, and that sets up for just a beautiful, right, move back down again. So don't be surprised if it's a little bit later in the session tomorrow because, again, that big news may whip around pretty good here. And so once we have that move lower, we can find those prior swings, right? Get up above the moving average, get those buyers to come in and try to take the bait on that. Once they do, we get all their stops sitting right there and we can use them as fuel. Retest that low, bears once, bears twice, and we're going back up where? Back to take out that high again. And that range develops once again. Is that making sense? I know it's a little bit more advanced, right? The back and forth like this, but not to worry. Once you spend a couple of days with maybe a week in my trade room as a member, as a student, you'll pick up on the footwork on this dance, pretty darn easily. All right. Be very careful on these E-minis. Be very careful trying to buy these markets right now. Again, on a pullback. Well, I should say this. Until we go back and retest that low, right? Once we retest that low, then yes, a reversal is certainly possible, and we could definitely be looking for a reversal at that point. But be very careful trying to pick a bottom on this as a V bottom until we start seeing that that pullback and that retest. Last but not least here, wrapping things up here on the crude oil. Boy, what's going on right now on the oil? There are really two main components. Keep in mind, oil, we do have the CPI report tomorrow. There's no rollover, though, on the crude oil. I have a lot of students right now trading the USO along with oil, so good to have you all here with us here tonight. First of all, we are bearish into a trading range right now. That is one of the most important clues. Being bearish into a trading range right now basically tells us that sellers are looking for shorts at resistance levels up above the top of that range. We mark up the amount below the range, mark up the amount above the range. Great area of resistance up there. Obviously, more levels of resistance up overhead. So we know that a bear market into a range tells us that sellers are basically looking for one of two things. They want to get up and sell back down into that trading range, or they want breakouts going lower. Get the 120 big round number looking pretty lonely down there, just below last week's close. If you watched last night's video, we talked about how important the prior week's levels are as we get closer to the end of this week, right? So as we get to Thursday, Friday this week, last week's closing price becomes a very big psychological magnet. So bears want selling short above the highs or below the lows on breakouts. Now, there's one little trick involved here on this chart. We still, if you recall from last night's video, we still have that strong move up. We still have that very strong move here. And I point this out because one thing you'll notice is that even though the bears have even though it's bearish into a range, what do you notice about this? The bears never really got their reversal. So this really, for the most part, and it doesn't look good for the bulls right now, but for the most part, it looks like this is a bull flag, is what it's looking like. It's an ugly one. It's definitely not something you would print out and put on your fridge at home, right? It's definitely not a beautiful thing, but it's a bull flag. And the difference between a bull flag and a reversal is how the market reacts to the moving average. So, for example, you'll notice right here, right? Notice how buyers see the separation that buyers get in a bull market. In a bull market, the buyers will jump off the moving average. And it's up to the sellers to do the same thing to take it back. So show me an example here where the sellers are getting a jump off the moving average. Didn't happen there, didn't happen there, hasn't happened yet. So the way that I look at the markets is it's not about lower lows and lower highs here. It's all about how is the market reacting to the moving average. So if you think about a bull flag again, right? A bull flag is a bullish pattern. But what you'll notice in a bull flag is it sticks around the moving average. Once those bears come in and they get underneath the moving average and jump, once they jump off that moving average, again, once they kind of take control of this, that's a reversal. If the market wants to simply sit here and grind down on that moving average, this is not a reversal yet, which means we still have that inkling of opportunity for the buyers to come in and rip it back higher. You have to remember, too, that move we saw yesterday was really big. And so oftentimes the markets really struggle to pull back deep enough to incentivize buyers, enough buyers to get in, to get it to go back up to retest the high. Now, the hard part is on this for the buyers, there, believe it or not, really are not many good entry setups to be a buyer right now. There really isn't anything, really. You know, that trend line we talked about last night has just been wreaking havoc, as you can see, pretty much the entire session. Now, when it comes to a pullback, usually number 3, 1, 2, and 3. It looks like right now the buyers are walking on thin ice. You know, you definitely can tell they're not getting a lot of performance out of this, but they're still holding. They're still holding above these prior highs. And so I definitely wouldn't count the buyers out. Now, again, the hard part is it's difficult for a short-term trader like myself to justify being a buyer right now. You know, I'm sure there are a lot of buyers who are already in on this move, simply buying into it as it went lower. So if you're already in this move, it's great. But as far as kind of getting into it now, boy, what a difficult job, right? Very difficult job to get into a long trade right now. In order for us to buy this market right now, we have to get some headlines that have to really change the perception of value and send this market really ripping. We really have to get, something has to change. We have to get, remember, oil right now is very much news-driven, headline-driven, and so we have to get some fresh information from OPEC or any of the OPEC nations that really shake this thing up for us to really give us enough momentum we need to justify being a buyer. So really at this point, it's all about being a seller at this point, as painful as it is to say that, because I know there's always potential to go back up and retest the high. Now, remember how we talked about the 3 types of pullbacks? That's exactly what we want to do here once again. I have levels overhead, and you want to think about like right here, okay? So now, as we go higher, shallow pullback, what? Trap. Shallow pullback trap, okay? Modest pullback up into that pendulum. Modest pullback, not too strong, right? But modest pullback. There's your failure. Buyers come in. They try to buy. This is not the place to be buying. This is not the place to be buying. Buying into those highs is the wrong place. These are the weak hands, okay? These are the strong hands. Okay, strong hands, big money traders, they've earned our respect. Okay, you don't just put a bunch of money in an account and keep it. It doesn't work that way. It works that way in the real life, in real life, but not in the markets. Right? You want to lose a lot of money, put a lot of money in an account and have no idea what you're doing, right? Big money doesn't keep big money very long if they don't know what they're doing. So smart money's down here, right? Dumb money, weak hands are up here. Okay, small stops, tight stops, can't defend themselves. That failure is a good setup off that high. And then if we can get this thing before we get back into that trading range, that failure into pullback combination, failure into pullback combo. What we really would love to get, what the best one would be, is go all the way back up, take out that high. Why? Because what do we say? Mission accomplished. Why mission accomplished? Because again, that move up, it still hasn't been retested yet. So if they can make that run back to that high, this is where, for risk reward's sake, it's great. But again, what's the price you pay for risk reward? The better your risk reward is, the worse the momentum is for you. That's the way it works. It's a negative correlation, right? The better your risk reward is, by definition, the more the momentum is a challenge. It's a price you pay for a bigger paycheck. It really is. It ain't no free lunch, right, in anything, really. So once we go up and retest those highs now what's the concern? It's location. Sorry, it's momentum. Location's great. Momentum's the problem. Now, buyers come in once. Buyers come in twice. Remember, you want those lower lows. Why lower lows? Right? Because buyers want to buy low. They want to buy low. And we get lucky. Trap. Little crown reversal, right? Love those traps entries off of that high. Or we simply draw that trend line coming down. Stops are now sitting right below that low. And we can light those stops up as we go lower. Find that new channel. Mark off that low. Find that high. And as we always say, right? The first test on that trap could be a trap, could be a failure, could be a pullback. That's where the money is right there, right? So 2-try failure. Why 2 tries? Because again, we're overall bullish. Remember, the bears never actually took control of this market. And again, that nice strong pop up as we go. Now, if we go up, take out that high, and then we hold that pullback and we blast through that high, okay? This is one of those 1, 2, 3 breakouts. Mark off that high, mark off that low, drill down, find those swings, grab that first test. Okay, I'm obviously kind of squeezing this all in here right now, right? But ideally, you want that entry to be above that high, right? Ideally, okay? That way you're not buying back into that high there, right? So really what you want to keep in mind is it needs to go up, pull back, and really, really push through that high. That way, when we do get that first pullback, we can now use that area as a support level now as we dig in and try to retest that high again. Trap pattern, failure pattern, pull back as it goes back above the moving average. All right? Get that 124.15. That level is the next level overhead. And we got 126.26 there if the party really cranks into gear here. Now, as we go lower, there are three really easy short setups as we go lower here right now. Keep these on your radar for all of these markets here tomorrow. One of them is the most common we're seeing right now is that pop and grind. So it drops down, starts to grind down overnight, right? Or grind down tomorrow morning. You draw a trend line off that low. You bring a trend line up top to find that channel. You look left, find those swings. Keep your eyes on other prior levels as well. Bingo. There's your short off that high. It could be a trap setup, a failure setup. Again, I'm not going to go into all the details here right now, but you'll see a whole heck of a lot of details inside that free course I linked up in the upper right-hand corner there. All right, so that's a great setup as we go lower. And keep in mind, too, where's the target on a pop and grind? The first leg, measure that first leg. That will tell you where the third leg's going to go. Make sense? First leg, third leg. Pops down, measure that pop, ignore the grind, and then the second leg, right, with the third leg in this sequence, the pullback leg, that's the measuring leg that we use. Okay, levels below us, you can see, is that 120. There's a big, juicy range magnet there, just above 118, 119 or so. Okay, that would really be where the market wants to go if it really takes off to the downside. Another one would be a two-try trap, strong move down, shallow pullback, lower low in price. One of my favorite trades whenever we have a lot of momentum going lower. This setup will also work if we see a free fall tomorrow after that news comes out on the S&P and the Nasdaq. Okay, that is a great setup to look for if it just starts to spit and run lower, right? Strong move down, shallow pullback, lower low in price, okay? Not higher low. Okay, don't mistake that. The higher low is a big, big deal. Lower low in price is what creates that swing high and allows you to get that trap to trigger. Very effective trade there. And of course, the last one would be just your typical 1, 2, 3 breakout. Right? We take out that low, we hold the pullback, we jump off that moving average. Remember, it's all about the bears taking control by jumping off the moving average. They didn't do it there. Didn't do it there. They haven't done it yet. So once they jump off that moving average, that's like a big signal, right? It's like the bat signal. Oh, okay, now we're bearish. Now we flood in, mark that low, find those channels. I'll go off this one. I'll go off this one, right? Finding those hidden channels there. Find those prior swings. And I want that first test off the high here. Again, think about where that range is down there to leave that as the runner. All right, guys? Man, oh man, we definitely have a big hurdle tomorrow morning at that 8:30 CPI report. But I'll tell you, Fridays have a way. Over the last couple of Fridays, we've seen some really, really good trades. It's been a great week so far. I got pretty high hopes for tomorrow as well. So hopefully I'll see you there tomorrow morning. Remember, we have our trade room every morning, 8 o'clock Eastern time. I would love to have you there trading right along with us. You're looking for a place to learn and trade along in a great environment. I'll tell you right now, if you put a little bit of effort in with me in the trade room, you're going to love your results. I'll put all of the membership links, all the free course links. I'll put that right in the description of the YouTube video here tonight. Don't be afraid to call the office if you guys have any questions. I know I go pretty quickly through these videos, but I'd be happy to slow things down, go over all the tools you need to get started, make sure you're ready for trading, get the software installed so you're ready for every day's trading session. All right, so don't be afraid to call the office, and you can always drop questions in the comment section below. Hope you guys enjoyed the video tonight. Hope you had a great, great week. We've had a very, very good week in our trade room. Looking forward to some more good trades tomorrow. Hopefully, I will see you there here soon. If not, if I don't see you in the trade room, we'll see you guys same time, same place next week. Next week, we gear up for the FOMC announcement next Wednesday and Thursday, which means we have a reaction day next week. So we got more good stuff coming here for next week as well. Good luck tomorrow. If I don't see you guys in the trade room, keep in touch if you have any questions. And you better hit that like button if you guys enjoyed the video tonight. Make sure you subscribe, set those notifications so you don't miss our next upload. I'm out of here for now, though. Be well, be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.